Welcome everyone to the Flow podcast, where we discuss the market structure within the digital asset space. Today we have a special guest, Graham Rodford, the CEO and the founder of Archax. Graham, really glad to have you here.
Oh, thanks so much for having me.
Thank you. So before we dive into the weeds of the market structure and technicalities, let's chat a bit more about your background. So you spent decent amount of time within your career on the traditional side of things. As you called yourself in the certain interviews, you were the numbers guy. You spent some time with HSBC, and then you've made this shift to the digital asset space. So tell me a bit more on how exactly did you came up with this idea of making such a shift?
Yeah, sure. So the numbers guy is probably just at school, mental arithmetic. Numbers were always my thing, and that kind of worked its way into a career in finance, accounting, and hedge funds. So I was always on that side of the fence from a financial point of view, and always on the regulated side. Always liked technology, always liked innovation. Kind of curious in the way that fintechs have been changing the world, and come across crypto in 2013, and saw Bitcoin. Bought some Bitcoin pretty early on. Managed to not make a lot of money out of doing that, but still got experience. And it's one of those things, when you get involved in it, you start to pay a bit more attention. And between 2013, 2017, started to say, okay, this is more than just some crazy internet money. This is actually a technology, and it feels like blockchain technology is gonna change everything. Kind of realized in 2017-18 during the ICO boom, some of these look like equities.
Did you buy some?
Yeah, I bought a lot. Yeah, I went for a period of buying. I just getting exposure. I think at some point I decided to buy 100 different cryptos on CoinMarketCap at the time, and that took me on a journey. I think I picked every coin between 200 and 300 and decided, okay, where could I buy them if I was interested to get exposure? And,
Do you hold some of that still since then?
Most, I mean, they changed their name, they disappeared. There's a couple like, Digibytes still exist, and Filecoin, and a couple of these that were, actually it might have been before Filecoin, but there's a couple of these earlier ones that still exist, but for the most part, they completely vaporized, disappeared. It was really the crazy ICO times. But it took me on a bit of a journey learning about wallets, exchanges. A number of exchanges just disappeared. With FTX and whatever more recently, they're high profile and you can track your money down. Some of these are just websites that disappeared, and you're like, oh, okay, there wasn't really huge Twitter followings on a lot of these exchanges back then. But that journey kind of just taught me more and more about it, and it just the conviction of every single asset's going to move on chain just increased. So end of 2018, there was a couple of people like Spice and Blockchain Capital talking about digital securities. We realized the world needed somewhere credible, and that's where we came up with the idea for Archax.
Nice. So you looked at all the mass within the ICO space and wanted to build something more trustworthy, I guess.
Yeah, exactly. Institutions are only ever going to face someone credible. Their reputation's just everything to them. And we looked at the counterparties, we looked at the products, and we just said, you know what, this space is going to need more credible people. So we tried to be an early version of one of those.
Makes perfect sense. And on a personal note, so you mentioned that you have two main passions. It's the meditation and martial arts. So how does that help you within your career, like professional path? And who's your favorite MMA fighter?
Yeah, so probably they're kind of quite linked. They sound quite different, right? One sounds quite spiritual and the other sounds quite violent. But, first watched the Enter the Dragon and Bruce Lee video when I was way too young at a friend's house. His dad had it on, and that kind of mesmerized me a bit. And I just got interested in everything. Kung Fu, boxing, Muay Thai, Brazilian Jiu-Jitsu, just all of them. And kind of around that, with Kung Fu and stuff, there's quite a spiritual side. So really early on, before I even really knew why meditation would be useful, I used to love these images of Shaolin monks meditating. So I kind of got into it without really knowing what I was doing. But then the interest in martial arts stuck throughout my life as a bit of a way of venting, because going to the gym, pounding a treadmill is quite boring, but going and punching someone or getting hit can keep you alert and keep you awake, and you're actually doing something that's developing a skill as well. So I kind of just followed that. I've always followed it. My kids do it now. It just really excites me. I love the idea that two people put themselves in a cage with pretty much no rules and, just test themselves against each other for a test of the skill rather than some of the bad reputation it gets. That's kind of where the love of it comes from. Then on the meditation side, just like all of those things, that when you do it, you realize the benefit. And when you stop doing it is when you're busiest, is when you probably most need to do it. And that kind of sticks in my head. Like if you're saying you're too busy for it, it's probably when you need it more than ever. So I just try and find time to do it when I can. Like I sometimes am good at going months and routinely doing it daily, and other times I forget. And then I realize, okay, why am I feeling a bit miserable? Why am I feeling a bit off? And it's just really, like yourself, when you're a CEO, you're constantly thinking, oh, where's that system? Where's that client? Where's my revenue? What am I doing about the cost? What am I doing about, this latest HR issue? Then I've got family and friends and everything else you're trying to juggle in your life. Your mind is just firing. And so it's just really a pause, like getting used to these thoughts flooding through your head and just finding a way of breaking away from it. So I find it useful because I love going all the time, and everyone tells me like it's not good for me. So they're probably right. And taking those little breaks sometimes, I think, just helps take the edge off of some of the more difficult situations. And then on the MMA side, there's so many fighters I love. There's kind of the early British guys like Ian Freeman, Lee Remedios. There were these guys way back in the day. My cousin was a fighter as well, so I got visiting these old venues and watching people, great atmosphere. And then in modern times, there's a few people representing the UK. So Michael Bisping recently, Paddy the Baddy, but one that stands out for me is a Hawaiian fighter called Max Holloway, who you can do a variety of different complicated martial arts to try and submit people, but he just stands in the middle and gives and takes punishment. And I think that takes a certain type of mentality to be able to really put yourself in the thick of it. So from an entertainment point of view, if nothing else, I enjoy watching him.
I totally agree. Like I sometimes play UFC on PlayStation with my son, and Max Holloway is my favorite fighter. I'm with you on that. And my son also does jiu-jitsu, so yeah, it's a perfect I think sport for a young kid.
Yeah, it's excellent.
It gives you the persistence and like the proper spirit. Totally with you.
Exactly.
And any meditation techniques that you can recommend that like works best for you? Because sometimes people treat meditation completely differently, right? You can hear some mantras, or you can just be completely silent with some sort of vipassana, or like what works best for you, and what can we recommend to any of our subscribers?
I've tried a lot of different methods, and I'm the sort of person that has so much going on that I almost need to force it upon myself. So whilst I think I can meditate on my own, and I do occasionally, I've found it most effective to have sound cancelling headphones on and guided meditation. And the irony, of course, is for most of the guided meditation that everyone's completely silent anyway. But like Headspace is one of the earliest apps, and it tracks your meditations, it gives you different ideas. It kind of says there, if you're feeling stressed, you've got, a family illness, you're dealing with grief, you're having panic attacks, whatever you're going through at that time, you get some videos, some guided meditation. Sometimes someone else talking through their experience can be really helpful. So all of that stuff I think is really good. And just in terms of a tip, I used to spend a lot of my time when I first started thinking, the idea is to think of nothing. So I spent a lot of time trying to think of black, and then you'd end up getting stressed out because thoughts would be firing into my head. And more recently, I like this idea that you're just an observer and you're watching these thoughts go through your head. Yep. So you might say, well, how am I going to deal with this HR issue? But the difference is when you're meditating, don't take hold of the thought and start thinking about it. Just let it go through and sail by. And you start to realize after a while that most of these times we're getting caught up in our thoughts is because we're entertaining them, we're talking to them. Yep.
Whereas if you just try and just watch them go by. So now when I'm sitting there, if something goes into my head, I'm not saying, it's so hard still, but if you've just had an argument with someone and it's annoying you and it goes in your head and you're like, I should have said this, should have said that. You can sit back and just go, that just happened. Yeah, it just happened, and just kind of deal with it. Then I think that's easier. Yeah, and I think it's really important to keep your mental health right. So for everyone who's watching us, we strongly recommend to use some sort of meditation practices. It just helps you stay awake and not lose the motivation sometimes.
Yeah, exactly. Yeah, exactly. Especially like if you're in a higher stress job, like, you know, as a CEO, it can be that way as well. But there's also people in a range that just go through their stuff. And one, we talk about the UFC, Paddy the Baddy, who's a young lad from Liverpool. One of his friends sadly committed suicide in the UK. And one of the reasons I like him is because he's a big proponent for mental health, especially in men in the UK, which I think under 40s is still the biggest killer. So, like, I think anything anyone can do, exercising, meditation. But I'm also a big believer in having a purpose. So a lot of people talk to me about being stressed with Archax, and I'm like, no. Like, I love getting out of bed and working and being driven, and, you know, hopefully it will succeed. Maybe it won't, but I'm trying really hard. So that really keeps me motivated.
Yeah, I guess that's the founder's way
Yeah.
of doing things. And speaking about like high stressed work, also you mentioned before that becoming a CEO of your own company helps you save ton of time of not justifying some of the decisions that you want to make that you used to do when you were working at the big bank or on the traditional side of things. But on the contrary, it is quite important to have the culture of judging those decisions internally. So, as if you're a CEO and the founder, sometimes people get to listen to you just because, right? And how do you maintain this culture of challenging the decisions internally within the company? Do you see that as an important part of your role of actually creating such a culture?
Yeah. So I guess what used to frustrate me before was I was the chief operating officer. So it always felt like, I need to be careful what I say because I have a chief operating officer now. But as a chief operating officer, you're responsible for everything, but you're not really the visionary or making the decisions. So, you know, the last hedge fund I was at, super great hedge fund, visionary CEO, but his brain was so quick and he'd be thinking ahead of everything. And I'm running behind him all the time, catching up, not necessarily knowing why we're doing things, always being a little bit left out of the loop. I mean, I'm sure I do the same to my COO now, but it's really frustrating when you're like, we should go this way, and then we go this way, and you go the way that they want, and it doesn't work out, and you're kind of responsible for everything that went wrong. Like, it's true. It's really frustrating. So when we left the hedge fund, because myself, I was the COO, the CFO, and the CTO started Archax. When we left and we joined, the other two said, "Oh, this is the most stressful thing they'd ever done." But for me, actually, I found it less stressful. I found it more stressful being the COO, responsible for everything, following someone else's path, and not necessarily having the potential upside. To now, where, you know, I'm a bit more involved. I've got a huge upside, but there's more on my shoulders, because if you've got confidence and conviction in what you're doing, then I think you're more comfortable. And to your point, I'm a bit different culturally to a lot of people. I know, you know, CEOs have different types of reputations. It is very rare that I turn up to the office and say, you know what, today we're going here and we're doing this, and everyone says we're not. Like, my way of doing it is, I'm thinking about this, what do you think? And I'll go around everyone, the whole of the exco, and I'll do it several times, and then I'll make a decision. Most of them are usually on page, because if they've got a good argument, I'm unlikely to go against them. And if they've got no argument, I go with it. And then sometimes they get like, the biggest frustration with them, which we've talked about before, is, you know, oh, we're doing too much. Should we stop doing some of the projects? And, you know, the thing that I probably need most challenge on is focusing on something. When you look back through what Archax has done, though, there's been several times we could have focused and it didn't play out the way we wanted. So I wouldn't say we throw a lot of mud at the wall, but I like to make a number of measured bets, and when it looks like they're coming off, then double down on them and start to pay more attention to them. But usually it's with the support of my ex-co. I'm certainly not going against them in most instances. In fact, I can't think of a single example where I haven't been supported by my top team.
And speaking about the tough decisions or any sort of decisions and panic attacks that you mentioned before. So what keeps you awake at night as the CEO? What are the toughest decisions or challenges that you face in that role?
Yeah, you know, honestly, nothing ever keeps me awake, because I'm up at 5:30, and my kids, the older they get, want to stay up later. So like,
thanks to meditation and kids, I guess.
Yeah. So usually head on the pillow, like I get, but the things that play on my mind all day long, usually it's the small stuff, you know, like the HR issue that just didn't need to be a problem and has been a problem, or like in the UK, bank accounts are like, for all crypto companies, bank accounts shouldn't be a problem for an entrepreneur or a fintech or a startup to be able to get a bank account. But for some reason, we're in this world where banks can just discriminate against startups. It really, really frustrates me. And not having a bank account when you're running a client-facing business that revolves around having bank accounts is a real problem. So they're like the small things. And then I guess on a bigger level, like crypto's hard. We've been around 6.5 years. Everyone knows Binance and Coinbase and FTX, but like if you put a list of all of those companies that were somewhere and are now nowhere, it's huge. So I think we've achieved a lot staying in the game. But the reason that we're still in the game is because I'm innovative and like to push boundaries, but I'm slightly cautious. I want to, more than anything, Archax needs to stay in the game. So usually my stresses are somewhat linked to that. Is our system right? Are revenues okay? Are we spending too much? Like right now, we've got so many good products. I'm always torn between, should I get 5 salespeople on to sell the products?
Yep.
Or is that going to make my burn go quicker? So should we cut costs or should we push for revenue? Like that, they're the sort of things that I don't know that there's ever a right answer, and we probably always end up in the right place. But like it can bounce around my mind for days.
Yeah, I totally agree. There's never a right answer, and only the time shows. So it is somehow important to build this culture of just challenging the decisions. And once it's collectively the decision is done, just need to follow and execute. And I think we'll see how it goes.
Yeah, exactly. Yeah, I mean sometimes though I am guilty of revisiting decisions.
Yep.
The my old boss actually is like super smart guy, event driven trader. An event-driven trader, obviously, where one company usually is taking over the other, and people trade around that event. And it always intrigued me that he would always do the trade at the very last second. In the kind of the way that I always used to revise for exams. There's some people that plan, but he'd always wait. And one day I had a good conversation with him, and he's like, "Why would you do anything until you have the maximum amount of information?" And that one of those points that kind of stuck with me. So now when I'm making a decision, I feel comfortable revisiting it if you've got, like you can't always do it, if you've got more information. So, back in 2018, when we launched Archax, digital securities, they're going to be massive. We should do this. Within a year or two, you kind of realize STOs are a few years away. And if we'd have just said we're just going to focus on STOs back then all the time,
Yep.
we'd be gone now. But instead, we branched out. We've done some OTC, we've done some crypto, we've done some work on the regulatory side, we've helped people do some tokenization. And those things have kept us relevant, kept the brand, kept the revenue. So I think you're right. You can't keep second guessing your decisions, but sometimes you just need to revisit and say, you know what, do I need to eat a humble pie? There's a sunk cost here. What should we do about it? And if you can reaffirm your decision, fine, crack on.
Yeah, and what you're mentioning, I think it resonates with there is a decision-making metrics, which basically tells then whenever you can make a decision which has low cost and potentially low implication, you should make it like immediately. And if you have something, or you can try a new business line, but if it does cost you like not a lot, and it can be done within the existing scope of resources, then probably you can do it right now. But if it's something you need to invest more time and effort into that decision, whether that's like material or technical, you should probably delay that decision slightly, until you get more information. So I think it's always good to assess like how expensive is that decision, both emotionally, commercially. And if it's not that expensive, then just do it straight away. Otherwise, try to get more information and see more, maybe the landscape changes.
Exactly. And we talked about it before. I know where this it's a problem for startups especially, because you're out in this world like this newborn baby. And in the finance world, you've got all the big banks out there, all the big financial institutions. And what has happened to us, and I know it happens to others, is you've got a limited budget and you're trying to be successful. And then, let's call them Bank ABC. Bank ABC comes along and they says, "Oh, we love what you're doing. We should work together on this." Now, that you can't put an invoice in for 100 grand or whatever it might be. And that you want to work with this bank. So what you end up doing is devoting your resources, your time, and then you probably need to amend your tech a bit. Then you need a new legal agreement. And you find it in this weird situation where you've got this behemoth that could afford to spend money but never would on you. And then you've got this startup that's making a bet. And you're right, you kind of need to sit there at the start and go, okay, Bank ABC considering working with us. What's the upside? Massive brand opportunity, press release. If they end up buying us, this will be amazing. And then your downside, I don't know, 20 to 50K.
Yep.
And we've had so many of them that occasionally have paid off, but there's a lot of money we've spent trying to secure relationships or do things we thought would be innovative, only to find out the other side probably wasn't as invested in it. Like from their point of view, it wasn't going to move the dial. From our point of view, it was everything. So yeah, those decisions are tricky.
And yeah, now I think it's good timing to talk about the structure and the markets. So let's talk about Archax history. When you were just starting Archax, the landscape was mainly offshore exchanges. I guess there was literally only Coinbase with a proper established presence onshore. Most of the venues were offshore. And then you have this idea of establishing a fully regulated UK exchange. So looking backwards, what do you think of of that decision, and how is running a regulated exchange? How is it different from building some offshore business? What do you think?
Yeah, defining success is hard, right? Like if you just do it on a monetary basis, what I should have done in 2018 is move to Panama or a small island somewhere, got a white label derivatives exchange and sold it all over the world with no AML KYC, or launched a stable coin. And I probably would have made, well, hopefully if we'd have been successful, I would have made billions in revenue, but I might have done some jail time and paid a fine. So if you were to only ever look at things from like a financial point of view, like, you know, the EOS, I don't know if it's an ICO technically or an STO, but the EOS ICO was always intriguing to me. Those guys raised $4 billion and then they got fined. I can't remember what the number was, but it was like $50 million. So from a pure return point of view, like best trade ever. However, my brain, being a qualified accountant, always working in regulated markets, just like I just never want to get into trouble. Do you know what I mean? I always want the regulators to be happy with me. I don't want to lose my accountancy qualification. Like I always want to be the good guy. So that means from that point of view, we never went down that route. So we launched a fully regulated exchange. 2020 we got our permissions. We started in 2018. The amount of checks, balances, policies, procedures. I mean, we had like 130, 50-page documents submitted to the FCA before we'd even launched the thing, right? It's insane. So we didn't make any money. However, if you take, like I mentioned earlier, now some of those companies that fell away, the founders made obscene amounts of money and probably more than I'll ever make, but their companies are gone. Yeah. Like Archax is still here 6.5 years later, and everything we said that was going to happen is happening. Now, I'm hoping we'll capitalize on it, but you know, if you go to the Archax website, there's a video there recorded in 2018 where we're talking about tokenization of everything, how it's going to happen. And back then, everyone was like, yeah, maybe. But everyone now is like, it's definitely happening. You definitely called it right. Now we just need to make money on it. So I think, you know, we've been successful staying in the game. And I like to think if you take like a 10, 20-year view, Archax will be making a lot of money and we'll be able to look back proudly and say, you know what, we did it all the right way. However, if you just look at the commercial side, launching a regulated market when there's no regulation, there's no pre-existing ones, there's no connectivity, no one else is talking about it, like we picked the harder mountain to climb.
And once again, I think quick success is not always the great thing. And sometimes it just dilutes the teams and founders. And in most of the companies that were built to last forever, like there are a couple of great books about that, right? So, and like From Good to Great, for example, when you look backwards at some of the larger companies, they were really like going steadily through, maybe not a huge success in the beginning, but that eventually ended up in decent, long-lasting businesses.
Yeah, exactly. That's kind of the trick is to maintain enough equity when you're on that journey. But yeah, exactly. That's the view I take. I want Archax to be one of the biggest financial services companies in the world. And you don't do that by getting into trouble with all of the regulators along the way. You can make huge amounts of personal wealth, but you know, it's not just about making loads of money for me. I want to build something where I make money, all my staff make money. Yep. It's a good product. It actually improves efficiency in the world. You know, like those things matter. I would rather like retire with Archax still existing and everyone saying that was a good product. They did what they said they would do, rather than making $1 billion next year. But everyone's like, well, Archax wasn't really a success. Like that would be, like, egotistically, it matters more to me that people think we did what we set out to do.
So you made this decision of like starting a regulated exchange. Did you assess back in the days any other jurisdictions? And if yes, why did you pick up London and the UK?
Yeah, I don't know if I'm just like a family guy or not. Because throughout my career, I always said, look, if you're a numbers guy and you're born like a mile away from London, which is one of the biggest financial centers in the world, why would you ever move anywhere else in the world to do it? And that kind of thinking stayed in place for Archax. Me and the other two founders were already working in central London. It's a fintech hub. It's a financial center of the world. It's got a good reputation. You know, we didn't ever really consider setting up anywhere else. We considered licenses in different places, and we've looked at different jurisdictions for subsidiaries, but London was never really in question for us. The only time when it became problematic was Brexit. Which, you know, people, like, I'm not a politician and I don't really follow politics closely, but the Brexit decision, the actual impact of that was, from a small company point of view, was pretty intense. When you consider that when Archax got its permissions, we were fully regulated as a broker custodian exchange across the whole of Europe. We were passported across the whole of Europe. So, and still even today, there's no one that has that, and we had it. And then Brexit overnight, bam, back to one country. And since then, we've got an application on the way in the Netherlands at the moment, and we're doing another acquisition in Europe.
Okay.
And we'll be able to passport back across the UK, across Europe again. But it just is it's quite, you've gone from whatever it is, 26, 27 countries to one, and that's what happened to us. And that's happened to a number of other firms as well. So there's a lot of good stuff, I'm sure, about England being out of it. But from an Archax point of view, it really limited what we were able to do.
But in the end, I guess, was a wise decision compared to like all the regulatory uncertainty that is in the US. London is probably doing great.
I think my old boss used to say again, as long as we're moving from bottom left to top right, if you think of it like that. So the regulation in the UK has been going from bottom left to top right. Now every time they release a regulation, there's probably a clause or two that really irritates me, but we're still going from bottom left to top right. So one of the first for crypto regulation in place. Archax was the first crypto asset registered company in the UK. I don't like the ETF rules in the UK. I think they make no sense. I don't like the banking in the UK. Any broker in the UK that's already regulated that wants to sell Vodafone can do so. If they want to sell digital Vodafone, they need to get registered. Makes no sense as well. There's a few things like that I'm just like, come on, that's stupid. But on the whole, the Tories, when they were in, and Labour as well, are supportive of this space and can see it as the future. And as a fintech hub and a financial centre, you definitely need to be looking at this space as important.
All right. So the regulatory challenge is solved. Now let's talk about the other challenges that any marketplace usually need to solve, right? And you are running an exchange which is a marketplace where, in order to be successful, you need to have a variety of diversified client pools, where you have market makers on one side, you have HFT clients, you need to have some institutional investors, you need to have some retail flow through the brokers. So how do you see that landscape, and how did you kind of build up this ecosystem over the years, and do you see there are still any gaps left?
I guess splitting crypto and securities quickly. I'll start with securities because it's a little easier. Like it on the regulated side, every asset in the world is going to be on chain. I've absolutely no doubt about it. Unlike crypto, anyone making market on securities needs to be regulated. Like in the UK, it's trading on own account, I think it's called. So that means that it's not as easy for people to make markets in digital securities. One of the great things about crypto, like Bitcoin trades, I don't know, but I don't know what the number is, 5,000 exchanges or places you can trade it. It's insane.
Yeah.
So if you're a market maker, there's a bunch of places you could hedge your risk. If you trade the tokenized money market fund on Archax, there's no way you can hedge your risk. Money market fund, low risk. But when you start looking at real estate or whatever it might be, it becomes a bit more of a problem. So getting market makers is hard. When it's on a secondary market, it needs to be in CSD. So there's a bit of a journey. People are always asking me about secondary market liquidity for securities. If I had 100 million in the bank, I can facilitate this all to happen. We don't have that. So there's, back to your point earlier, slowly building bits and pieces. We've got our license for exchange custody brokerage.
Yep.
We're building a central securities depository. All of those things are going to come together, and we'll see this play out over time. Right now, it's very early for digital securities. On the crypto side, even when we started, it was pretty well established that there were exchanges, there were market makers, the early stages of decentralized exchanges, liquidity providers, AMMs, like they were all kind of in place. So there's kind of a well-trodden path there. But if you're setting up as an exchange like we are, even though I think we're one of the best reputable ones globally and one of the most regulated, building liquidity is hard, and liquidity begets liquidity. And because there's less regulation in crypto, people can operate dark pools. You can have exchanges that no one knows who they are. Like the competition's hard, so you need
fragmentation. I mean, like we talk about that on almost every podcast. Crypto, digital assets is the most fragmented asset class in human history.
Yeah,
It's with all of those like thousands of venues.
Yeah, exactly. You just and you don't, from a user. The reason Archax is good is from a user point of view. You come to Archax, I'm sat here. I'm in the UK. I'm fully regulated. People will track me down. Yeah. You go to a DEX, you don't know who runs it, who owns the tokens, where's my assets going. If you submit them, what does a smart contract do? Like, the whole centralized.
And what assets you're going to get in exchange for what you get? Like, was it used by some, I don't know,
exactly
unpleasant jurisdictions or?
Yeah. And ours are all, they're fully on-chain vetted, AML, KYC, all of your assets held in bankruptcy remote vehicles protected by UK trust law. They're completely different, but we are still a startup, and we still need liquidity, and we still need users. So you've kind of got these things playing together all the time. So we talked a bit earlier about, I need to make revenue, I need to spend money. We need to build a venue, and when we're building a venue, we have a couple of choices. We need to get people to Archax, so they need to have a good experience, and that's getting better all the time, but it's not ideal right now, but it's much better. But when you get to Archax, if there's no liquidity, you'd immediately leave and probably never come back. So when you get there, you need some liquidity. So Archax could provide a bit of liquidity, but we don't have much money. People don't like you making markets on your own venue because of all the wash trading and everything. So then you want to work with market makers. Market makers have to connect to you. They have got a stream of these 5,000 exchanges that want them to connect to them, and they're going to go where the liquidity is. And guess what? If you're a startup with no liquidity, they're saying, what do you want me to do? Exactly. So your choices are, do I pay you? Do I pay you? Do I give you inventory? Do I pay you a retainer? Do I pay you a share of fees? And some people want retainers, some want to pay for connection, some want to take some of your equity. It's a challenge. And we have a few connected to us right now, but getting any one of them on board is a long process. So if you can find a good partner that can stream liquidity in from a number of sources and do a way that you're both happy commercially, then it can be a much easier partnership to help get your liquidity off the ground.
Makes total sense, and I'm certain there is a way of solving that with our partnership, and we can talk about that in a few more minutes. But on the market structure side, so now you've built the exchange component, and last year you also launched the OTC part. So can you tell a bit more? How did you make this decision of adding the OTC part to your business? And what's your current focus? What's the split between the exchange business and the OTC?
Yeah, so I guess on the crypto side of our business, it's all exchange and OTC. And I guess the way that we think about it is crypto is more, ignoring the institutional players, more people want to turn up and trade and in or frequently or infrequently, but more ad hoc, decide to go and trade a bunch of crypto that they like, and probably at smaller size. Whereas if you're an institution like a payments firm or someone, maybe you've got some sort of crypto offering, or you have crypto for some purpose, it's much more likely you want to trade a block. And you probably don't want to go to an exchange and just do a market order for the full amount. And you probably, if you're a payments company, don't have some guy there working VWAP over X number of days, right?
You don't have a sophisticated trading team.
Yeah, so you want to know that you can get depth of liquidity at a tight spread in one-off chunks. And that's kind of why OTC exists for us. And quite often as well, there's a lot of on-ramping, off-ramping, people call it in crypto, right? Where you're basically going from fiat world to crypto world. There's a lot of people that have a bunch of crypto and want to get it back into fiat, or have fiat and want to just put size into crypto. And for those guys, it makes a lot of sense. So we decided to launch that desk. We've launched a desk. It's been successful. I think there's a lot you can do there. And I think over time, over the next couple of years, what we'll see is increased regulation in this space and more clients doing OTC transactions at fully regulated, registered venues.
So in the 5 years' time, do you see more volumes, let's say within Archax, going through the OTC offering or on exchange offering?
Or 5 years, probably the exchange will be larger there. I think. I think after a while they kind of end up mashing together to some extent, because in the, you kind of talked about earlier the fragmented liquidity. There is fragmented liquidity, but kind of when you drill down into crypto, you'll find the same 5 to 6 liquidity providers sitting between every venue. And so when you get to a certain size, all of the liquidity is being shared on your venue. Yeah, I'm not sure, to be honest with you. I expect both to be big at Archax in the next 5 years. FTX actually had and I remember on their exchange, they used to have an OTC section of their exchange, which after they got to a certain size, they shut down. I mean, obviously, looking back at that now, maybe there's some different reasons for that. Yeah, I suspect we'll end up piping liquidity from a platform such as yourself into both systems, and people will choose RFQ or exchange. That's how I expect it will play out.
Makes sense. Yeah, and there are thousands of flavors of OTC, which can be arranged in a more efficient way sometimes partially to solve this fragmentation issue. So I think some clients can combine both ways, and it's great you have both options, right? So to serving different use cases.
And also in 5 years, I expect we'll be a lot more developed on the regulated security side. So, I think you'll start to see blocks of fixed income trading in the same way, digital fixed income moving between non-custody wallets in the same way that crypto does today.
Yeah, and most of the, I guess, globally fixed income is a pure OTC product, which can be a great addition to what you guys are building. Let's get back a bit to the market structure. So FTX happened almost 2 years ago, but the debate is still there about the debundling and vertically integrated services. So you are a big proponent basically of the vertically integrated company because you run your own exchange license, you run your custody, you do have the OTC part, and you mentioned you are also going for the CSD. So in from your point of view, how would you think you will be competing with some of the companies that only do the parts of that? And how do you see the future of debundled versus vertically integrated companies in the crypto?
Yeah, it's we've noticed it's quite hard to compete with people that are focused on custody, for example. Now, I'm not saying that their offering is better than ours, but when you have a sales team that's going out and just saying we're a custodian all day long, then people go there for custody. Now, somewhat ironically, we're one of the most regulated crypto custodians in the world, but we don't go out there pushing our custody offering. So people have their assets with a less regulated custody offering just because it's hard is my point. It's hard unless you, back to earlier, if I had loads of a team, I'd be building out my custody system and I'd be out there selling it. But we're not. We're focused on this ecosystem play. So Archax is one of the only places in the world you can go to create your digital security, custody it, have us raise money, trade it in a secondary market, put in a CSD, all of those things together. And the reason I won't think it works, I think of this from a pure database point of view, which is a bit of a sad way for my brain to work. But if you think you've got an exchange where Bitcoin trades over there and you've got a custodian and you've got a broker, then you've got different databases in everyone. And my life at hedge funds was spent mapping stuff, sending files to each other and mapping fields. When it's all in one place and you've got one securities database that all the systems can talk to, there's an efficiency there of how it passes through the system. Now, when we applied for Archax's regulations in the early days, we actually said, should we split out the exchange, custodian and broker into separate entities? But in the end, we decided to apply from one entity and we got the permissions from one entity. And so I'm a big believer actually in the efficiencies. If we like Binance, which has a lot of problems, but from a like, what did it bring to the world? Like, when before could you go to one place and invest in new products, see your OMS, your risk engine, your custody, your trading all in the same place? And I was just looking at it, and any ICO on there, just anyone raising money, if they say, okay, I'm going to get a listing on Binance, and they raise money, of course everyone buys it because they know it's going to go and trade on the exchange. Whereas if you look at London Stock Exchange, it's an exchange. They're not really in the business of raising money for people. And every time everyone trades on their venue, the assets are going off and being custodied elsewhere. So you've got all of these intermediaries, all this fragmentation, all of the inefficiencies in the system that are completely broken up. And then you kind of get to this question of, well, does that matter? Have you got conflicts? Do you need to unbundle? Well, like FTX's problem wasn't the fact that the exchange and the custody were custodied together. FTX's problem was that they were taking client assets and doing stuff with it that they shouldn't be doing, that they didn't have appropriate governance in place, that they didn't have an appropriate board in place. So it is true that Archax exchange is linked to our custody, but every cent of clients' assets is accounted for every day. It's protected by a trust agreement. We're not allowed to use them for everything else. We have annual audits that they're in place. I've got a board of directors made up of the former number 2 of the London Stock Exchange and the chair of RBC Europe, who are constantly on my case, making sure these things are okay. So, like, I think people simplify the exchange custody together argument because it's convenient. But FTX's problem wasn't that they were linked together. It's that bad stuff was happening there. So I think you kind of throwing out all these efficient. I think we just need to look at Binance and just look at that and say, if you had the choice as the LSE and saying, should we carry on just running our matching engine, or should we have the custody, the fundraising, the order management system,
and the retail clients just being able to directly open accounts with London Stock Exchange?
All of that. Yeah, on my Hargreaves Lansdown account, my brokerage platform, the one I use for my pension and everything. Every time I do a transaction, I get completely legged over. Every single time. Like, and people can say, oh, free trading, no commission on somebody's part. It's not true. On the back end, the liquidity providers just adding a massive spread on it. You are getting screwed. And if I bought some coin shares were one of the first ETPs out there. I bought some coin shares ETP when you could trade them in the UK as retail. And like, by the time you'd done the FX and by the time you'd done the transaction, it was like 3%, or it was something insane. And you're sitting there just like this, like, retail is not being protected by layers of intermediaries. Whereas on Binance, 10 bips, 20 bips, your assets through there. They're SAFU, are they? Are they not? Who knows? But your assets are custodied, they're being traded, it's being protected, you get a good experience, you can trade derivatives, you can trade NFTs, you can trade spot. Now, I'm not saying that the way they approached everything was perfect. I'm just, from a pure user point of view, there is a reason people like the eToros and the Binance, and they don't want to fill out paper documents and have an old school broker. So I think all of those positives are more important than the lack of governance that existed somewhere like FTX.
Yeah, totally agree. So I think the most disruptive thing about the Binances of the world was the shift of the user experience, where you don't need those intermediaries. But now I think the industry's main challenge is to get the best of both worlds, like the regulated TradFi, where you actually keep everything properly accounted without conflicts of interest. But on the other side, we need to get way more of a positive user experience from the crypto side of things.
Yeah,
and
exactly.
I think that's the way to succeed in the space. And congrats on doing the important job on that front.
We're trying, yeah, thanks.
So now let's talk about RWAs. That was like a buzzword for some time. And do you think it's still like a buzzword, or you seeing some actual traction within the space from both institutional or retail clients?
Traction. We're still early, but we've gone past the point of if this is going to happen into everyone saying this is happening. So you've got, we've publicly done stuff with Aberdeen and BlackRock where we've put their funds on a blockchain. BlackRock have done some stuff with securities as well with Biddle, which is like $500 million. There's loads of treasury-based products out there, Ondo, Open Eden, but when you get outside the top 10 offerings, you're at like $20 million, $10 million, something like that. So it's small, it's early, but every bank, every investment manager that we speak to is working on this, wants to work with us, is thinking about how do I, use money market funds to make payments? How do I use it to pay dividends? How do I use it for collateral? Like, why would you have cash if you can transfer a 5% yield? Like, why would I put my money in a bank earning 1-2%? Again, back to retail kind of getting legged over a bit. You don't get the base rate. You're in a money market fund. You're pretty much getting 5%. Now, if I can spend that like cash, if I can use it to buy Bitcoin, if I can use it to send to you when I owe you money, why would I ever put it in a bank? I'm not taking bank risk and I'm getting a higher return. So I think, and back to the regulation point, actually, if you think about Tether, like Tether, a lot of people have a negative view on Tether, but if we just look at the functionality of it, like the ability to transfer value 24/7 atomically and have it accepted by everyone is like, it's amazing when you think about how easy that is. And obviously when rates went up, everyone started to realize Tether made a lot of money, which has created other stable coins. But it also makes you realize, well, if I would hold Tether, why not own a money market fund that's paying me 5%? And there's a bunch of regulatory reasons why that's a problem right now. But rather than USDT, if it had the same functionality, I'd rather own the Archax Aberdeen tokenized money market fund and be earning my rates all day long.
Exactly. And I guess, Tether just made a great job of creating an entire market of the stable coins, and the adoption of Tether is just phenomenal. But on the retail client side, the clients get like nothing, no yield out of it. So it's just a utility. And I think, that's clearly maybe a next wave of disruption where you can explain retail and institutional clients that they actually can get the yield, and there might be some profit sharing between the stable coin issuer or the money market fund issuer and the client.
Yeah, exactly. And this is where regulation can be a bit like, I'm generally pro regulation because I hate crime more than I hate regulation. But in terms of the regulation for stablecoin, like the reason stablecoins are so successful is frankly because people don't do AML KYC, and so it's completely frictionless. But on the flip side, most of the stablecoin regulation I see doesn't allow you to pay interest on the stablecoin. And I think the reason for that largely is in bank protectionism, that they want the banks to still exist. But if we just think about, let's make the world efficient, why do we want like millions of people not able to claim the yield on them? It doesn't make any sense at all. It makes much more sense for the regulator to say, okay, let's come up with stablecoin regulation that's interest-bearing stablecoin regulation that maybe has a higher bar. Maybe you need to do AML KYC, whatever, but then people can be getting the interest that they deserve. I mean, kind of, it probably leads into central bank digital currencies, to be honest with you. But you're in this weird world at the moment where we're kind of, the regulators are kind of hating on unregulated stablecoins, but at the same point, they're not letting the regulated stablecoins pay yield. So if I had the choice, do I use Tether or a regulated one? And over here, most places in the world accept it, and I don't have to bother doing AML KYC. Over here, I have to have all the friction, but I don't get any of the upside of the yield. Why would I go there? So I think we need to just have a bit of a look at that and make it a bit more efficient.
So what do you think exactly needs to be done and what you will be doing in order to bring the mass adoption to those tokenized money market funds?
It's at the moment, most people that buy money market funds, I would say, already have access and already pay the lowest fees to some of the biggest banks. So those people aren't going to move to the digital world overnight. So you're kind of trying to find traction in, maybe companies that have just raised their Series B and they've got 100 million and they don't have easy access to banks and they're pro crypto, or maybe payment companies who aren't really being given fair bank accounts. So I think there's something to be done there. But I think when we start seeing the value of holding money market funds, that's when it will be a game changer. So we're working on a tokenized collateral network internally. We're speaking to a few institutions about it. What that will enable banks, institutions, buy side, whoever to do is hold our tokenized money market funds. And when they need to satisfy a margin call or an obligation or post collateral for whatever reason, they can send our money market funds to anyone 24/7. And we're expanding that to be pretty much any asset at any time. And I think when you start seeing some of those functional use cases, if you're then a hedge fund, you're sitting there on a Friday and you're saying, okay, I've got a bunch of cash. Should I sweep it into a traditional money market fund or should I sweep it into the digital one? You're going to say, well, why wouldn't I use the digital one? It's the same fees. I can convert it to USDC if I want on Saturday. And I can also post it as collateral 24/7. I think once you start making the product more attractive, then like we're talking hundreds of billions of dollars, right? Maybe it might be trillions, moving over from that world to the new.
Yeah, well, I'm excited, and me personally, I also face the same, like I would say, issue or the use case, because we keep part of our treasury just in the US T-bills, and part of that is with some DeFi pools where we just stake stablecoins. And if there's a more efficient instrument there, I'm certain myself and like lots of other projects in the space, they
Well,
will
let me
definitely.
send you some details on it.
Yeah. Yeah, exactly. I'm looking forward to that. Any other interesting RWA projects in the space that you see? Look, what do you think will be driving besides the money market thing that we discussed, which I believe it should be a game changer? But any other interesting projects that you see will be changing the space in the next 2 years?
There's the Investment Association in the UK is like a trade body, I guess, of investment managers. We're part of that. We've been part of their fund tokenization. Fund tokenization is the biggest area at the moment. We, as a regulated custodian and qualified custodian, we can hold most assets in the world and create tokens backed by them. So if you phoned me later on today and was like, Graham, I want to hold the tokenized FTSE 100, like we can do it today, but there's no real reason to want to do it yet until it starts getting accepted as collateral. So most of the people we're speaking about fund tokenization. We've done the carbon credit journey a number of times. That market's just has as many problems as crypto, to be honest with you. And then real estate has been a talking point forever. Like I've spent a lot of time on a lot of projects since 2018, and they never go anywhere because fundamentally, people are never investing in a token, they're investing in the underlying project. So you tend to have a negative selection bias. If someone couldn't raise money, then they're going to list a token. That's not going to help it. So people talk about real estate a lot. I don't see it going anywhere. Funds is where it's at. The only area it seems to be getting a lot of attention at the minute is private equity funds and single name positions, for want of a better phrase. So, I think every wealth management platform out there is looking to differentiate themselves. What can I offer that others can't? So if they can offer access to a private equity position, or if there's a way that you can make a private equity fund a bit more liquid, then they're interested. But I've seen a lot of people talk about how they're going to bring liquidity to private markets, but there's a reason why liquidity is difficult there. There's information asymmetry all the time. A lot of the time, founders like me, you don't really want your equity trading around in the secondary market publicly, because if you've got to go out and raise another round, you certainly don't want to be doing a down round. So you build restrictions into your articles. A lot of these private equity funds, they have drawdown provisions. So we can tokenize the fund, but then you start saying, okay, if you've committed 100 million to my fund and I've drawn down 50, can you trade your 50? Do you trade your commitment with it? Everyone's got different. It gets quite complicated in the detail. So I don't think you'll see much. I don't think you'll see many new innovative products outside of funds and T-bills, tokenized T-bills, in the next while. I think you might start seeing borrow lending platforms like repo platforms for tokenized T-bills, tokenized money market funds, and you're certainly going to see a collateral network because we're launching one. But I suspect most of the instruments that move around on the collateral network in the early days will be simple RWAs.
Yeah, I guess for the borrow lending stuff, we need more institutions with larger balance sheets involved, because right now the credit risk in the space is still high. And I think, we need more bigger balance sheet, more regulated players like yourselves. And hopefully we'll see that. But the thing you mentioned on the RWAs, on the equity, I think that's an extremely interesting area. Like I personally know like 4 friends of mine that are building their own pre-IPO platforms. And that's just a huge market. Everyone is trying to get some sort of secondary liquidity for ESOPs or for any sort of non-public company. So I think there might be some upside there.
Yeah, I think the pre-IPO one is one, like we get offered blocks sometimes of these big names.
Yeah.
And, we've thought about, is there a way you can efficiently put this in the market? So we can technically trade those today, just not on our platform. But that's probably, if you're going to pick an area of private, that's where you'd pick. but you're really picking it because it's about to be public and liquid.
Exactly.
If you see what I mean.
Exactly.
So it's yeah. So yeah, but yeah, that's probably
It's
a
an
worthwhile area.
it's an interesting space to track, and I think if someone like Carta is making a decision to disrupt it in the U.S., I think they have all the chances because they have like a consolidated market of the companies that they run, or someone like AngelList. So it will
Yeah.
be interesting to see. Well, back to the crypto market structure. We've touched a few important points, and just summing up the discussion, what are the key milestones for Archax for the next, I would say, 12 months? Because the crypto environment is changing extremely fast. So let's focus on the next 12 months. What are the key steps for you?
Yeah, so we've got some regulatory permissions pending. We've got one ongoing in the Netherlands. We've got this company we're trying to acquire in Europe. We also have a subsidiary called Montis. We don't talk about it that much, but it's applied in Luxembourg to be a digital central securities depository. We're getting pretty close on that now. What that, for those that don't know, anyone that in Europe at least, when you go to trade a security on the secondary market, it has to be in a CSD, which is like DTC, Euroclear, Clearstream. They're the central core books and records. The problem that you've got today is if you take a digital security and register it in Euroclear, the official books and records are a database in Euroclear. And if you tokenize a security, you want it to stay a token. You want it to stay digital. So we built Montis to be digital. So your books and records are on chain at all times. So that's a big milestone for us. Hopefully around the end of this year will be a complete stage of application and be ready to go forwards. And that means then we can create a security, trade a security, raise money, register it, get it on the secondary market. And the collateral network we're working on as well. We've got 4 or 5 entities we're speaking to about that. And again, back to our point earlier of investing, we're investing a lot of money in this because we believe that's where the future is going in the short term. It's one of the only places where you can see why there'd be a lot of on-chain transactions of size. And it's also one of those areas where I think retail and institutions would both like to play. Like if you think about Compound, Balancer, Aave, these platforms, that service they provide in the crypto world, smart contract, I post my Bitcoin, I borrow some money or whatever you want to borrow and lend. The securities financing world is huge. If you can develop somewhere where I post my money market fund, I post my MicroStrategy, my Vodafone, whatever it might be, and borrow money against it, then that's going to be large as well. So I guess we're kind of taking our products and moving them into that world. And then on the crypto side, we are, I wouldn't say we're late to crypto, but we've been focusing on the digital securities, but everything we've built on our platform can cope with both. On that side, it's all about developing liquidity and traction. There's a couple of big players in the world. There's a lot of players that have fallen away because they focused on crypto, and when volume and volatility drops, they get hit by volumes and hit by prices as well. But over the next 2 years, we're going to see an increased regulation in crypto, and I think you're going to see consolidation and a flight to regulated venues. So we're definitely going to be strengthening our offering on the crypto side. I'm passionate about crypto. A lot of the institutions want to focus on securities, but I think everyone's missing a bit of an overlap there. Like what are these cryptos paying the gas? If you believe in public blockchains, as I do, if you think every security in the world, let's say, is going to be on Ethereum, Hedera, Ripple, wherever in the future, you need the gas. So if you think every security in the world is going to be on chain, as I do, then you must see that that's a bull case for buying the underlying. So I'm not shilling any of the underlying, just saying it's not just that these are crypto monies and they're not like meme coins or utility tokens where you can argue, or governance tokens. Is there a value? Is there not?
Yeah.
Like people will need these in the future to pay for their transactions. And I'm arguing that every financial transaction in the world is going to be on chain in the future. So I'm a big believer. I think they need to coexist. And, to say we're not doing crypto to believe in digital securities doesn't really make sense to me.
So to a certain extent, buying Ethereum is like owning a portion of Federal Reserve.
Yeah, exactly. Yeah. Or it's almost like Swift issue their own Swift token.
Yeah.
Every transaction exists today. Exactly right. Yeah.
Interesting. Yeah. Like I once again totally agree. I think these like L1s, established ones that already been like battle tested for years, they will stay there, and they will be massive because they'll be serving the real world use cases, like, and they will be the rails of the entire new economy for the next 10 plus years. So yeah, if you just look, what's the upside there? It's huge, and we should all be just keeping some Ethereum.
Yeah, exactly.
And a few other options. So it was really great. I think our listeners enjoyed the discussion, and just to finish with one of our general topics is, can you recommend a couple of books to any of our listeners? And if you can list 2 books, one on the personal side of things, something that you just inspires you personally, and the second one on the business and professional side, what would you recommend?
Yeah, God. So I used to do a lot of hiking and mountain climbing and stuff, and I went through a period of reading these like near-death adventure books. So there's a couple of those. So Into Thin Air was a good one, which was about a kind of Everest expedition and kind of everything that went wrong there. And there's one called The White Spider, which is amazing, like one of the early climbers. So probably one of those, just for kind of, gripping and keeping you involved. I mean, there's, like the problem, the businessy ones, like I find that they make their point early on and they iterate themselves a number of times. So I'm not sure I'm recommending books here per se, but certainly some concepts. So there's one, actually there's another one, because we talked about meditation stuff earlier. There's one called Feel the Fear and Do It Anyway, which is mainly about like anxiety and panic and those sorts of things. But the concept behind it is just do it. Like, stop worrying about stuff. So like now if I'm, I don't know, about to spar with my son or dive off a higher diving board, or usually I just say, whatever, nothing's really going to be that bad, and you do it and you feel better. And so
like Richard Branson's approach.
Yeah, exactly. Just crack on. Like, it's never going to be as bad as you think. You're going to tell yourself all the things that are probably never going to happen. So that's a good one. And then there's some interesting ones I like the tipping point. I think is an interesting concept, and this idea that, I mean, to take the morbid example, I think they use in the book, like if you think, someone got smoking from cancer from smoking, then imagine that over their life they smoked cigarettes. Like if they never smoked, they never would have got it, and they smoked and they got it. At some point, there must have been a point where if they'd stopped on that day, they wouldn't have got it. And then you take that down even further. There must have been a point where they stopped that cigarette at some point. This idea that there's a point in time where making a decision takes you one way or the other, that kind of intrigues me. So when we're making decisions, trying to use as much information as possible, make good decisions all the time can really make the difference, however close to the wire it is. So, whatever that might be, turning off a deal too early, or, going with Vespa, one or the other, or making a quick decision, like you said earlier. It might be you say, I'll think on it tonight, and thinking on it tonight, it might make the outcome better, it might make it worse, but it's probably going to change things. So, I like the concepts of that. I think the power of now is another one like that. Actually, is that Eckhart Tolle or Malcolm Gladwell? I can't remember, but getting things done. Like I never was necessarily like the smartest academically, but my work ethic is still get stuff done, work hard, churn it out, and like I'm not sure there's a really a book
persistent
that
bits, luck, and talent, and
yeah, exactly, yeah, every day, yeah. There's like there's not many people that annoyingly there's one guy in the office that turns up before me and leaves after me now, which really kind of annoys me.
Should promote him.
Yeah, exactly. So he's on his way out. Yeah, exactly. But even from at 10 years old I was out doing a paper round, and then 16 years old I was stacking shelves, and now if I'm sitting around relaxing, it's pretty hard to not be doing something. And I think that for me, any book that promotes pushing yourself, getting stuff done, this whole idea that there should be a work-life balance is completely false to me, because I think they're the same thing. It's just like work is in your, like the Venn diagram is life, and
my
work
wife
is
not
in
always agrees with me on that.
Yeah, exactly.
I totally get you.
Yeah, but like what my kids lose in not seeing me, they gain in drive, ambition, pride. Like they come to work, they do whatever, they're interested in what I'm doing. And when they're older, they'll hopefully go, oh, you know what, I saw how happy he was doing that, rather than me. I don't miss any key events, but what are you really missing? Usually I'm missing a breakfast cereal every now and then, but what I'm getting out of it makes me happier, pushes me harder, gives me a bit of drive. So yeah, I don't. Anyway, I think all of these things, they're all kind of overlapping. I think most of the stuff I try and do in life, I try and do in work as well, which generally is, I think people are happiest when they're most useful, fully engaged, and have purpose. And I think anything which says, you should silent quit your firm and only do the hours, like, that's all rubbish. You're gonna be miserable if you live your life thinking of work as somewhere you need to rush out. If you go to work with the view, you know what, I love being here, I'm gonna really contribute. Like, you might think, oh, it's only benefiting the founders and the shareholders, but it's not. It's benefiting you. It's benefiting everything about how happy you are.
Exactly. And like, I'm so certain the world will be a way better place if there's more people sharing the exact same vision and concept, and like the approach of the way they like work and how do they perceive work. I think that's the key to just success and different quality of life.
Yeah, exactly. I can agree more.
Well, Graham, it was a great discussion. I really enjoyed it. I'm certain our listeners did enjoy that as well. So thanks a lot for coming. And please subscribe to the series of the Flow podcast of Finery Markets.
Thank
you, Graham.
me.
Thank
Thanks.
you.